What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to break down why tomorrow is going to be an absolutely massive day as we have the notorious FOMC meeting ahead of us, not to mention some massive earnings as well. So I'm going to break down how this may affect the overall market, how this may affect Tesla's share price, and a very big trap that's very possible to play out in my opinion. Now, before I break anything down, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, whether it's $1 or $100, it's up to you. You're guaranteed up to 12 free stocks, each valued up to $3,000. And the best part is, any could be a free Tesla share. It's a limited time offer. The offer ends in just one day, so check it out before they run out. With that out of the way, let's get on with the video. Tesla's up 3.5% for the day. I did predict a bit of a rebound in the markets. I wasn't too sure about how strong it would be for today, and it is looking like it's playing out so far. But I did also mention that I wouldn't trust this rally, at least as of right now, and I really believe there are many signals suggesting that the market could continue to push up tomorrow and then get a big rejection and start to come down as we get into like Thursday and Friday and beyond. And we might see a lot of selling, and this push up we see might be a big trap. So why is that? First off, we have to talk about tomorrow. It's going to be an absolutely massive day. So far, the market is pushing up. And what's happening is the market is also prepping for FOMC. We did see some sideways action, I would say a little bit more bullish price action, but some sideways action. FOMC is going to start at about 2 o'clock p.m. Eastern time. That's when the rate hike decision is going to actually start. That's when the big news is coming out. If the Fed gives us, 50 basis points, the entire market's going to crash. Tesla's going to come down very hard. SPY is going to come down. NEO is. AMD, the entire market's going to crash if they give us 50 basis points. That's quite unlikely in my opinion, though. They're more likely to give us the 25 basis points, and that's most likely going to cause the market to pump a bit. But do not be fooled. Okay, I mentioned that 2 o'clock p.m. Eastern time is when the hike comes out, the decision, but at 2:30 p.m. is when the conference is going to start. All right, this is when they actually start speaking. That's when Jerome Powell is going to be speaking. 2:30 p.m. Eastern time. Keep that on your calendars. The whole market is going to move, and it's very possible that he might actually cause a reversal in the markets. So pay very close attention to him if you can. I'm actually going to be very busy during this time, so I won't actually be able to record a video until a little bit later than usual. I should be able to do it by the evening, but it's going to be okay because I will let you guys know what he says. I will be up to date on everything. Once again, the Fed calendar is saying February 1st is going to be a very important day, and then the next FOMC meeting after that is going to be during the third week of March, so we have quite a bit of time until then. The markets are currently pricing in 25 basis points. The market is expecting 25 basis points. It's already priced in. If we end up getting 25 basis points, expect a bit of a rally in the markets. The market's going to push up, but like I said before, do not trust it, at least at that time frame, because 30 minutes after the decision comes out, Powell will be speaking. Now, another thing about the way the market reacts to FOMC is we don't always get an immediate reaction, right? During the last FOMC meeting, the market did end up tanking because of some of the things Powell said and because of the fact that not everything was expected. So I just want to note that what happened last time was the market actually came down a little bit when Powell was speaking, right here, and then we started selling off much harder. The real sell-off came afterwards, by the next day and the days after. So on the first day, the market came down a bit, was kind of flat, and then, this was after Powell was speaking. Then all of a sudden, the next day comes, the market drops like 2%, then we drop another 2%, then we start crashing, right? That's what happened after Powell spoke. So there could be a delayed reaction, and that's why I want to be very, very careful. I also want to note that we have some very important earnings coming out the day after, so that could also play a big role in a potential sell-off. I'm not guaranteeing it, but I'm saying it's very possible. just remember, after the market closes on Wednesday, we have Meta, we have T-Mobile and Peloton before the market opens. And then for Thursday, the day after FOMC, we have Amazon, we have Apple, we have Alphabet, we have Ford, we have Starbucks, a bunch of giants coming out for Thursday. It's going to be very huge. I also want to note that guidance is not that great for Apple, at least as of right now. And there's a decreased possibility of them actually meeting on earnings, given what's happening with phone sales and etc., at least for Q4. So please be ready for that. Don't keep your hopes way too high. I know Apple typically meets on earnings. I'd be very, very careful with that. I will talk a little bit more about this tomorrow, though, but I want to note what under my big warning is for everyone, and that is the dumb money and smart money confidence comparison right over here. On the top, we have SPX's chart, right? Very awesome to see it, especially rallying very recently, but look at how the different players in the game are reacting to these price fluctuations. And you will see the fact that when the market gets these big peaks right here, there's a pattern. When the market peaks, dumb money, retail starts buying and buying and buying. They become so bullish. They think the market's going to go to all-time highs. Whereas smart money is going to become less confident. They start actually selling at the top, right? And that's what actually caused the big sell-off, or at least that played a role, because smart money knows these things much better. They get the data way sooner. Data could get leaked, and they're much more experienced, and they have so many more advantage over everyday retail investors. Now, on top of that, if we look at the bottoms, when the market bottoms, we tend to actually see divergences as well. And this became way more apparent during the second half of 2022. Look at the August peak right here where my cursor is. You will see dumb money was so bullish. They were so confident the market was going to explode and go to all-time highs. The opposite happened. And smart money was not buying these dips. They were selling up here. They were not happy up here. And what happened? We ended up selling off. Smart money was right. Down here, the same thing happened. Smart money was so bullish down here, and dumb money was scared. People thought the market was going to collapse, SPY was going to crash to the 2000s, or at least SPX. And what happened? When smart money turned bullish, the market started pumping right from the low we made back in October. Then during this high we got in December, smart money was not as confident. Dumb money was so bullish. They were very, very bullish. And then the market ended up coming down back to like the 370s. But it wasn't as extreme. Now, all of a sudden, we're starting to rally. The rally is coming back. The market's pushing up. And what's going on now? Smart money's confidence is the lowest we've seen in the last year. We've never seen it this low, actually. Smart money is selling. They do not trust the rally at all. And they actually dropped. Their confidence inflows are now at only 41%. Once again, the lowest we've seen for almost the entire last 12 months. It's crazy. Smart money does not trust the rally whatsoever. Dumb money, retail, they're so confident. They're at one of the most high levels of confidence we've seen since the August rally. And that's a big, big red flag in my opinion. Retail is now at almost 80% confidence. People are so bullish. The fear and greed index is going very near extreme levels. I find this very suspicious. I'm going to be very careful when we see this chart. Now, like I mentioned in my previous videos, correlation does not mean causation. This does not prove that this is guaranteed to like be an indicator of what the market will do, but it's very likely, and I really want to note that it's very likely the market will reverse, and this is likely a very big warning about it. Now for Tesla, I want to note some other important things. I am recording this intraday, and the volume so far is about the same as yesterday, very, very close. Tesla is a little bit up, pumping with the markets. We are still a little bit lower than our average volume, at least for the time being. I'm recording this just a couple of minutes before the market closes. I want to note that right here, we're still seeing heavy short volume. The shorts are still piling in. It's not as extreme as what we saw last Friday. So there are still shorts piling in. The majority of the volume is made up by the short sellers coming in, and also short volume as in selling pressure. It is still very, very powerful, and we have to be very, very careful. Coming down to some more data. I want to note that the overall short volume, we're not actually seeing the updated data yet. This actually decreased a little bit when I saw this on Tradedics. I'm saying this because of the fact that there's not as much shorting, at least as of right now. I think institutions are just kind of stepping back and they're just waiting to see what happens during FOMC. And we have to be very careful during times like this. Now, I'm not seeing any massive pieces of news as of right now. It will affect how the market moves. It will affect Tesla, but so far there's nothing too big. I also want to note the fact that once again, the similar trend that I mentioned yesterday was Tesla tends to be slow in the beginning. In the beginning of today, Tesla was red. Tesla was well behind, SPY and the overall market. And then all of a sudden, as time went on, Tesla started to actually push to the upside. So expect a trend like this maybe tomorrow, where Tesla's kind of flat during open, not as strong. And then as the hours pass, it gets stronger and stronger. Also, I want to note that, this doesn't matter much, but Wednesdays tend to not be the strongest days for Tesla. We're only green about 48% of the time. But like I said, it doesn't matter because it depends on the Fed. February's, however, are one of the weakest months for Tesla. Tesla's only green about 33% of the time, and February starts tomorrow. So please be very cautious when you see data like that. Analysts are still very bullish on Tesla. That's awesome. But now let's talk about the charts. What on earth am I seeing right now? Now I'm noticing another pattern, and I'm thinking that tomorrow we might get one of those pushes again. Okay? And I'm going to explain exactly why and why you should not trust it initially. So what's going on is we had this weird pattern on SPY where we kind of push up really hard, then we gap down, then we continue with the push, we gap down, then we continue with the push. We did gap down, I think it was yesterday, and now we're basically coming very close to filling the gap. I'm not sure if we're going to fill it today. We're very close though, and we do have some resistance at 405. Excuse me, sorry guys. But the thing is, it depends on what happens tomorrow. So hypothetically, I think the market might hold these levels, maybe try to push up a little bit tomorrow. But if we get 25 basis points, the market's going to rally and SPY is going to get, in my opinion, back to 408 to 410 in this area right here. We could get right back up there if we get the 25 basis point hike, because the market is expecting this. But there's no guarantee that we're going to keep pushing from here. I just want to note that we have to be very cautious. Now, on top of that, if we get 50 basis points, the whole market is going to come crashing down. SPY is likely going to come all the way down to 400, then break back into the bear market territory below the trend line. And it's just going to start crashing. And so is Tesla and the whole market. You could argue that this is looking like a potential head and shoulders with a sloped neckline that's slanted. You could argue that, but it's not confirmed just yet. We have to wait and see. But I just want to note, you have to be prepared for what Jerome Powell says. Now, the most likely possibility, in my opinion, is going to be look, if SPY does fill this gap before the market closes, we might hold this level. But even if we push up a little bit, maybe we get 25 basis points and the market pushes up, even if that happens, okay, I'm not going to trust it. I believe that what's going to matter the most is what Jerome Powell says. And the problem with this market rally is it's not really backed by fundamentals. What fundamental backing is there in this market unless we get really strong earnings from Apple and Amazon? There's not really anything too big. Earnings were pretty mixed this cycle. So what I'm trying to say is, because of that, because the reason why SPY pumped this much and Tesla pumped this much was not, Tesla was obviously an exception, but I'm just talking about the overall market. I'm saying that because it was a short squeeze and there's no guarantee it's going to last that long. It's not very sustainable. I also want to mention the fact that we got many of these signals suggesting that we have these divergences on the RSI right here, which are suggesting the market's going to come down. We also have the VIX suggesting that the market might push up a little bit before we get another big reversal. The VIX right now, it had this giant gap that formed. I think we might come down on the VIX to fill this gap. I think implied volatility on SPY is going to come down and SPX. And I think that's because the market might pump tomorrow. I'm now thinking that we might get 25 basis points. The market's going to push up, maybe, and then all of a sudden, Powell says something the market doesn't like. He might say something like they're not ready to pivot. They're going to raise the terminal funds rate. They're going to make it a 5.25% overall hike, and inflation's not where they want it to be, and just things like that, right? I don't see how he's going to be super, super dovish, at least in my opinion, because unemployment is still not where the Fed would probably want it to be. And we are at the risk of stagflation. So we have to be very careful. Now, here's the thing, okay? the VIX is likely going to come down, meaning SPY might push up. SPY is the reason why the VIX would come down like this. I think tomorrow it's going to happen. I think we might get a small rally, and then VIX might bounce because SPY might get rug pulled, right? Just like what happened last time, I think this could definitely happen. I'm going to be very cautious as a response. The QQQ has this big gap around this 296 area. We might fill the gap tomorrow, which means Tesla in the market might pump a little bit going into the FOMC. We might see a small pump, and we might see us pump off 25 basis points. That's what I'm thinking. The dollar is still pretty flat. The 10-year treasury yield is still on an uptrend. It's not necessarily breaking below it. There is a gap down here. We could try to come down a little bit to fill the gap tomorrow before we still get a bounce. And if the market comes down, I mean, there's still a clear uptrend that could be respected and a clear double bottom that's still playing out. It's not necessarily invalidated. It's still very possible. On Apple, I want to note Apple could hold up. Maybe Apple pushes tomorrow. But if Apple and Amazon and these giants start crashing on Thursday because of bad earnings Thursday and Friday, if Apple goes to new lows, man, SPY is going to come down, Tesla's going to come down, the whole market is going to take a hit. That's why you still have to be very careful. So anyways, I've talked about SPY, what I think is going to happen. Once again, I think we're going to pump a little bit tomorrow. I'm not guaranteeing it, but I think it's a little bit more likely to get 25 basis points. So we might fill the gap. We might see SPY peak between 406 to 410, somewhere here. It's very hard to predict exactly where. More likely towards like 408 to 410. And then once we get the pump, it's like a trap. Then we're going to likely get rug pulled by Powell. We might not crash immediately on Wednesday. We might slow down a bit, but by Thursday, Friday, going into next week, we might see the market come down more, in my opinion. That's why I'm still very cautious. For Tesla, I'm thinking now that maybe Tesla doesn't stop at like 175. I did mention that yesterday. We might go a little higher. Maybe we come back to this 180 level tomorrow. We do have major resistance between 180 and 182.5. So I think Tesla's going to revisit the major resistance, form an M-like pattern. I think that's the most likely thing. Tesla pushes up one last time tomorrow. Maybe it's the rate hike. Maybe it's in anticipation of the rate hike. And something will likely cause this thing to come down, in my opinion. I mentioned previously that this is likely going to be a trap. In order to change my opinion, we'd have to see what Powell says. If he ends up being very dovish, which I'm doubting, I'm still going to be double-minded, but I'm not going to be as confident about what I said if he does end up acting that way. I think it's very unlikely, though, all right? It also depends on earnings, right? But I think it's very unlikely that we're going to see a 25 basis point hike plus Powell being super, super dovish, plus, Apple and Amazon and all these companies killing it on earnings. That's unlikely, in my opinion. Uh, that's what it's going to take to pump this market and continue with the bull run. I think it's unlikely, though. Like I said, for Tesla, I'm going to say that maybe 175 to 180 might be the peak. We might trade kind of sideways in the beginning tomorrow before a nice push up a little bit. And then somewhere here, I think Tesla is going to find its top, and we're going to likely see a reversal, maybe late into tomorrow, maybe going into Thursday and Friday. And I do believe we're going to see this thing come down. I think this pump right here, it's most likely not going to be extremely sustainable. And I think that you have to be very cautious. I don't trust this rally, at least as of right now, given all the signs I've shown you guys, looking at the yields and the divergences and all that stuff. So that's why I'm just not as confident in the rally. Tesla has these gaps down here. You have to remember them. I know people get annoyed when I say this, but Tesla's a stock that's notorious for filling its gaps. We have like 4 or 5 gaps in the 110s, the 120s, the 130s, the 140s, and etc. There's a gap down here in the 160s. Tesla could come down to fill this gap soon, depending on what the Fed says. There's also a giant gap here in the 140s. So like I said, guys, be very cautious. Tomorrow, I'm predicting, excuse me, sorry, guys. I'm predicting Tesla might pump a little more, just a little bit more. All right, we could get to 175, maybe peak around 180. And then it's all going to depend on the Fed and then earnings after that. Most likely, I think the most likely thing is we form an M shape. We have a double top forming on Tesla, and we get another rejection in this key supply zone. I think that's most likely going to happen. I think Tesla's going to come down. I think Powell might rug pull us, and the reaction will either happen immediately or it may be delayed for Thursday and Friday. So once again, be very cautious. I will be ready to record and upload a video tomorrow, just a little bit later, maybe. I do apologize for that, but that is what happens when you have a busy schedule. But it's okay. I'm still here. I'm not giving up, and I want the best for everyone out there. Thank you all so much for listening. Have an absolutely incredible rest of the day. Tesla to the moon because the long term future is still very bright. I know I've been talking about the fact that there could be a reversal and Tesla could come down, but I just want to note I'm not giving up on the company. I'm not giving up on the stock. Fundamentals are not the biggest thing right now for the overall market. I know Tesla did pump off some strong fundamental revelations, but at the end of the day, the Fed, the shorts, the overall trend in the market and sentiment is still going to be the king, at least for the shorter term. That's also what Elon Musk said. He said the Fed could still cause lots of valuations and stocks to come down, but like what Elon Musk said, I take the same stance. We're still very bullish long term. Long term, Tesla is going to be a monster. It still is a monster. It's going to kill it long term, in my opinion. Not financial advice. It's going to break all time highs. I'm not worried. I'm just seeing more and more buying opportunities if it does end up dropping more, which it most likely will. That's how I see it. Anyways, thank you for listening. Have a great day, guys. Tesla to the moon because the long term future is bright. And peace out.